Today introducing about the topic is that the GST. So GST is a very important topic in the principles of taxation law. GST, first of all, we have to know what is a GST. So the G stands for goods. So goods for dealers, manufacturers. And S for the services. Service means it's for the service providers. And T, the last one is the T. T, we all know that it's a tax. So the tax can be divided into two as the direct tax and the indirect tax. So direct tax means it is a tax levied directly on a taxpayer who pays it to the government and cannot pass it on to someone else. There should not exist any intermediaries in the payment of tax in direct tax. GST stands for Goods and Services Tax, which was introduced in the budget speech presented on 28 February 2006. It laid the foundation for a complete reform of India's indirect tax system. Finally implemented on 1st July 2017 as the Goods and Services Tax Act. The indirect taxation system thus went through a chain of amendments since the inception. In the Indian Constitution, new article was introduced, Article 366 Clause 12A of the Indian Constitution defines Goods and Service Tax (GST) to mean a tax on supply of goods or services, or both except taxes on supply of alcoholic liquor for human consumption. There are 21 chapters containing 174 sections under the CGST. Taxes currently levied and collected by the center are the Central Excise Duty, Service Tax, Special Additional Duty of Custom, Additional Duties of Customs, Additional Duties of Excise, Additional Duties of Excise in Goods of Special Importance. In state taxes that would be subsumed under the GST are state weight, central sales tax, luxury tax, entry tax, purchase tax, taxes on advertisements, taxes on lotteries, betting and gambling and etc. Thinking about this GST, there are lots of benefits under this GST. Fewer taxes, fewer tax rates and exceptions, broadening of tax bases, mitigation of cascading of taxes, improved compliance and revenue collections, efficient use of resources, creation of a common national market, and estimated to increase GDP by 0.9% to 1.7%. So these are the benefits of a GST. By introducing these goods and service taxes, lots of benefits are get for the economy of our India. Every concept and everything has the advantages and disadvantages, just like the GST also has certain advantages and disadvantages. Advantages GST, very importantly we can say that it has reduced a number of compliances, it's dropping corruptions and tax leakages, and it's easy of doing business, formation of the common national market, and it's very simple procedure through an online, and it's helpful for the new small business schemes, that is the composition scheme for small business, and the greater limitation towards registrations. These advantages of GST, there are also disadvantages for this GST. And the first one is that the taxes on service will go up from 15% to 18%. Tax on retail would be almost double. Imported goods would be taxed at a higher rate by around 6%. Double control on every business, that is both in the central and the state level. All credit will be available from online connectivity with the GST network. Hence, small businesses may find it difficult to use the system. Service sector, they have to register in each state with the central and the state government. So every business at all India level would have around 60 registration, while they are having just one today. Introducing about this topic, first of all I had introduced about the taxes divided into two types. First one is that the direct tax and another one is that the indirect tax. Let's differentiate between this direct tax and the indirect tax. On the basis of meaning, the direct tax means if a tax levied on the income or a wealth of person is paid by that a person directly to the government. That is the point. Directly to the government, it is called a direct tax. And in the indirect tax, If tax is levied on the goods or service of a person is collected from the buyers by another person by paid by him to the government is called indirect person. So in this indirect tax there is another person, there is an intermediary person is coming, and this indirect tax and the direct tax there is no intermediaries, there is only a directly paying to the government. So that's the main difference that comes between this direct tax and the indirect tax. So next about this incidence and impact. Direct taxes falls on the same person, imposed on the income of a person and paid by the same person. But in the indirect tax falls on different persons, imposed on the sellers but collected from the consumers and paid by sellers. So the initial burden and the final burden by distributed between different persons. So next about the burden. In the direct taxes, more income attracts more income tax. So tax burden is progressive on people. But in the indirect tax, a rate of tax is flat on all individuals. Therefore, more income individuals pay less and lesser portion of their income as tax. Tax burden is regressive. So in the direct tax, the tax burden is progressive, and in the indirect tax, tax burden is regressive. Next, telling about this evasion. In the direct tax, the tax evasion is possible, and the indirect tax evasion is more difficult. And next about telling about the inflation. Direct tax helps in reduce the inflation, and indirect tax contributes to inflation. In direct tax we cannot shift to another person, but in the indirect tax can be shifted to others. Example for the direct tax is the income tax, wealth tax, capital gains tax, security transaction tax, purchase tax, all come under this direct tax. And in indirect tax we can say it's a very example is that the GST and the excise duty also. Types of GST in India. So GST can be divided into three as the CGST, SGST and the IGST. CGST means the central, C for central, that is central GST. It is collected by the central government. SGST means state GST. It is collected by the state government. IGST means an IGST or an integrated GST that is collected by the central government. So these are the three types of GST in India. Let's come to know about the difference between CGST, SGST and the IGST. CGST means the Central Goods and Service Tax to replace the existing tax like service tax, excise, etc., and it is levied by the central government. SGST means the State Goods and Service Tax replaces the existing tax like a sales tax, luxury tax, entry tax, and is levied by the state government. IGST refers to the integrated goods and service tax, and it is a combined form of CGST and IGST, and it is levied by central government. Next, the collection of tax in the CGST by the central government, SGST by the state government, and AGST by the central government. Applicability. By looking about this applicability, CGST in intrastate supply, SGST in intrastate supply, and IGST in interstate supply. Next about the registration. In CGST, there is no registration till the turnover crosses 20 lakhs. In SGST, no registration till the turnover crosses 20 lakhs. In IGST, the registration is mandatory. Next about the composition. In CGST, the dealer can use the benefit up to 75 lakhs under the composition scheme. In SGST, the dealer can use the benefit up to 75 lakhs under the composition scheme. In IGST, the composition scheme is not applicable in inter-state supply. So these are the very important difference between the CGST, SGST and the IGST.